Do you remember the ways that your body was craving my neighborhood, baby? I've been thinking for days if we're changing the pace, do you think it'll phase you? You better believe it. Back from the rush, I found us a reason why this love will out. Can we keep our smiles going out? This love is what we found. We'll never know. We'll never know. Maybe if we never know, just tell me we're holding on to us. Maybe if we never know, just tell me we're holding on to us.
welcome, welcome everybody. I'm a little sick, um, so excuse my voice, but we're gonna still get this rolling. All right. So, I'm gonna grab a glass of water because my voice is really bad. I didn't think it was gonna be this bad, but it's pretty bad. So I'm gonna go ahead and grab a glass of water. I'll go ahead and pop off my chart so y'all can just look at the chart for now. There's nothing on there. It's gonna be blank, but then we'll get started. Probably in like 2 minutes. Just give me a chance to grab a glass of water so I don't have to be talking like an old man. Alright, so I'm gonna transition y'all. Listen to this tune. I'm actually gonna change the song. Give me a second. Hold on. I know I'm taking a little bit. Sorry about this. Just trying to get everything set up right. Alrighty. So I'm gonna transition y'all. Listen to How High You Are by What's So Not. Very good song. Alright. We'll get cracking in about 3 minutes. Alrighty, I'm back. Perfect timing. Right at the end of that song. Alrighty. Let me get this set up real quick. Cool. Now we went 100% good. Oh wait, I forgot. There we are. Okay, that'd be good. I had to make sure my chat was open because I still haven't changed. I still haven't set it up on OBS the correct way. Since I updated OBS and changed it changed everything for me. But this will work. Everything's fine. Everything's fine. We're fine. So let us begin, my people. What is going on since the last time I talked? I think. Let's see here. I think the last time I talked was here, obviously. And this is neither of these implications I've alluded to correct. I said if we broke down here, we would break below. We didn't break below that line here. Then I said if we stayed above here, we would go up above that, but obviously we didn't break above that either. So it leads us to question, like, what's going on in the market? Is this a positive advance in the market in the sense of bullishness, and we could still expect no new lows to be made after this low here? We don't know. We simply just don't know. I know for a fact we're in some sort of consolidation wave 4, and we're due for at least some attempt up. It's just finding out when it's gonna happen. When's it gonna happen? That's the key here, because we want to be on that right trade when it happens. We don't want to be missing out. So that's our key here. We know what's happening, but we want to know when's the correct time to pull our trigger to hold on to a trade in regards to a bullish trade, long trade, to really give us the results we want. When is that going to happen? Like I said, if we just take it to pure time perspective, from my perspective, again, and I'm going to keep going over this and over this and over this until we get a break before or during or after. Again, I do not believe a 1-2 of a larger degree could be smaller than a 1-2 on a small degree. So if you have trouble understanding that, your primary wave 1-2 cannot be smaller than your subwave 1-2, or else that doesn't make sense. It just doesn't make sense. How can this 1-2 of a primary 1-2-3 be smaller than this 1-2-3-4 like that? I just think this doesn't make no sense in terms of structure. Absolutely no sense. Because of that, I cannot call this a 1-2, 1-2-3-4, 3-4, whatever you want to call it. I cannot call it that. I cannot. The only thing I can call it is a 1, elongated 2, 3, and a 4 now. And so, going on with this idea, this is why I've been kind of quiet, because I'm just waiting for this time perspective to be filled. I'm just waiting for my fulfillment on this time perspective, and then I will be more confident in some things. The minimum requirement is already met right here. This is the minimum requirement we needed. From this high to this low is wave 2. In order to become a systematic complementary wave 4, it must land within this range here. From this to here, with your hot spots being here to here, here to here, and one more just around that. So those are your hotspots for a correction to end in regards to time and relationship of its complementary proposed sister wave 2 to a 4. Now, your sister waves could always are always within the same degree construct. So if it's an impulsive, you're only going to be measuring sister waves in regards to impulsive waves. If it's a correction, then you're only going to measure the sister waves in regards to correction waves. So what does that mean? If I have a 1, 2, 3, 4, 5, I'm not going to measure this one in regards to this 2 to find a complementary time perspective. Instead, I'll use this to find this time perspective, or this to find this time perspective. Now, you can get some clues to this correction in regards to time off of this. Like you would expect at least a minimum of a 0.6, but it's not always that way. So you have to be careful, because sometimes it could be a WXY and you just don't know. You think you're in an impulse of like 5, but you miscount it or something, and it's a WX and a Y real quick, and this quick little thing gets you. So you gotta be on your toes. So with that, what's the time perspective here being here? Let's just draw a blank. Let's just start over. Let's just run through this real quick. Let's go off 10 hours. 10 hours is my favorite in regards to this stuff. It really is. And start off this peak here. Throw it up that high there. And then I also want to throw this to bow bow. I love this song. Absolutely love this song. So I'm gonna raise this up a little bit. Okay, so I also want to check one thing here. Okay, so we don't have a bearish divergence call off of this peak to this high like we do, I think, on the daily here. On the daily, we got a divergence call from this high to this high, which is pretty significant. I'm gonna tell you why in a little bit. So, since we have an applicable amount of time hit here in regards to time to a complementary sister wave here for 4 here, then we can, that's what I'm saying, we can really start thinking this could possibly be our first advance up. And we're consolidating in a 2 here and about to bust that for a 3 coming up soon. Because we do have enough time. We do. So when we dive into the subwaves, what do we see? Like, what do we really see here? It's very difficult to gauge. Very difficult to gauge. Like, would you consider this 1, 2? Oh, there's 3, you know? Or 1, 2, 3, 4, 5. Then A, B, C. Hit a perfect algo A, B, flat, DCB, box range. Came down and hit the, it has to be a minimum golden box. So hold on, let me flip this real quick. And we definitely got a minimum of the golden box here. We hit it all the way to the 886, which is perfect for a specific flat we look for. It shoots over the top, truncates just prior from alleviating the bottom. It's very, I'm not gonna lie, it's very difficult to judge. from a smaller time perspective. That's why I'm just waiting. If we're able to close above this on our 4s to like 10-hour time frames, not consistently on a 10-hour frame because that's a little large, but maybe consistently on a 4 to 5, and maybe I can even leave a 2 hour up there. If we could just consistently close above this box I have here, we could really begin to think that we're impulsively moving up. So this 1, 2. Let's see if hit up. Look at that. Boom. This is our minimum time we look for that correction from the initial impulse. If it's a 5-wave impulse, remember if it's a 3-wave impulse A B C, this could be a quick X wave, X W X Y, and you'll be looking for that 2/3 relationship from this correction to this impulse, but it won't give you that. Instead, it'll give you a 1/3 correction in regard to time from this impulse, and then you get left in the dust, waiting on the sideline, or you even be shorting this top, and it turns around on you quicker than you expected because you're thinking this is a 5-wave impulse instead of a 3-wave impulse. So the fact that we didn't, I also want to do one other thing real quick. We didn't really retrace anywhere significant. I would really like us to get down here to this, which I think we're gonna do. It kind of looks like that. This little structure here looks bearish for me, and it feels like it wants to come down to at least this green line I'm throwing here, which I'm about to turn purple. I'm about to cancel out, throw the actual line. Bang. Your hotspots right here, though. You got some hotspots right here. Now, there's a few ways you'd be counting this. Like I said, someone may count it 1, 2, 3, 4, 5. But to me, this doesn't look like an impulse. This was too long of too complex of a 3 in regards to this 4 here and 2 here to be considered a correct structure of, like, to me, this correction matches this correction right here better. This impulse matches this impulse better, and this impulse here. Quick 1, 2, 3, 4, 5, ending diagonal. Broke down, cleared 90% of that A, B, C, or W, X, Y. Like I said, this structure right here was bearish to me. I don't know exactly what it's putting in here, but to me it was bearish, and it looks like it wants to come down one last little time before probably an ultimate decision will be made in regards to bullishness or bearishness. How was that? That was a weird ass noise outside my window. Yeah, to me this looks like an A, B, C, W, X. I'm gonna put in a Y here. So you had some sort of a 3-wave coming down. And this is A, B, C. Here's X. I'm gonna come down for, since this to me this is a zigzag. I could be wrong, so I think we'll do like something like this, and then we'll move up. Or if this is a flat, which I guess let's see here. It's probably more related to a flat, honestly. Yeah, that's a flat. So that's a flat here. So this could be a zigzag. So since this is a zigzag here, a flat here, this can be a zigzag like this to get us down to this gold box. But I do not expect us to close anything below this 5,066 and 70 cents range at all, at any time frame above the 1 hour. No close beneath this line here on the 1 hour. Above from the 1 hour above. No closes. We can land down here, but we cannot close below. Okay, that's the rule. That's my rule, right? Cannot close below. We can land there, but we can't close below. In regards to time, we have had enough time to correct this proposed impulsive structure here. Ideal is we would like it to get here to here, ideally. So let's go ahead. I'm gonna go to delete this, like that. Leave that box here. That's just another. There's still a possibility this could be the count too. This is a bearish count, but I don't think this is our issue now. A, B, C. I'll tell you right now, and this is why it's gonna be important to like either have a stop on your open, so like when you set your orders up, and your order gets taken, then your additional opening order is a stop loss to protect you on any downside risk. And the reason why I say that is because just because we do have enough time in regards to time here, and we possibly have made a first impulsive move up, 1, and 2 coming down like this. We still have a possibility that this is a WXY, W, X, A, B, C. Now we're going to put in since it's a flat, this is going to be either a zigzag of some sort. Yeah, so it would get down. If it got to here like this, like it pivoted here, came up like this high, and broke below, it could get down to this level and still be valid for impulsively moving up. As long as we do not break below, I think this is the lowest we can get, about 4,888 and 15 cents, and still be considered bullish on 2 hour closes and above. All closes 2 hours and above, and maybe even 4 hours above, must maintain 4,888 and 15 cents. Must. Perf. And because of this, if you're gonna set yourself to like I said, this looks bearish to me. All these wicks right here, no real good push up after these wicks have been shown. Tells me that there's no buyers left down here right now. No buyers left down here right now. What is also pretty important was you notice how this low right here on close was taken out. Right here, boom, and tap twice. That's another bearish retest. So a scalp play would be like a short potentially. Just stop just below that high, shooting for this mid pivot here at 0.5, which is 5,133. we're not hold. These are not hold positions because we're bullish. We're bullishly trending, and we're just trying to figure out when the break's gonna be. I think time is now alluded to where it could happen at any moment as long as we have a correct structure to look at in regards to a wave analysis. Do we have that here? Yeah, kind of. Um, I really wish this low would have got taken out here on Bitcoin, but since it did on Ethereum, Ethereum did take out this like this, and since it did that on Ethereum, I'm liking this as an ABC a little bit better than on Bitcoin, but this way to be very cautious. And I wanted to cover something right now because this is basically it for Bitcoin. There's really nothing much to cover for Bitcoin in regards to the implications of what I expect and want to see. Another possibility is that if this is a WXY, and I did end here as a 5-wave impulse A, B, C, and we're putting in an A, B, C, D, E, Y leg. If we stay sideways like this and make a triangle there, like I'm kind of showing, like this. Look, if we stay up here like this, create like a triangle like this. I'm willing to call this Y like this. And that's only if we stay sideways and high and we come to an apex like this. This is what we will call an ABC squeeze. Or obviously this is a WXY, but in essence it's the same thing. You break down, come up, and it comes your adjacent, or you're not adjacent. Your sister wave to your initial impulse to the correction isn't very telling either. It's very flat and sideways. And the reason why they call it a squeeze is because people were thinking this should break down in regards to Elliott wave analysis, and it squeezes flat and then it breaks up real hard and takes everybody out. And this will be key if it stays like this. It'll be huge. It'll be really easy. It'll be really easy for us to understand what's happening if we get this look here. Okay, if we get this sideways look, then that means we're putting in a WXY, in my opinion. And as soon as the apex of this triangle is found in regards to the break, we should break up pretty impulsively and pretty violently. We notice that interest is dying and dwindling as time has gone on. The interest is dying. Right? So I wonder if. Hold on, I'm about to pull up something real quick. So I'm gonna get the open interest right now for Bitcoin. Well, I'm trying to. That's funny. So, let me pull up this picture real quick for y'all. So, if I'm not mistaken, this is saying small accounts are all on the buy side. On the other accounts and the larger accounts or the funds are on the sell side. Ooh, that hurts so bad. I want to aggregate average of all open interest. This one just gives me averages of each exchange is open interest, like not exchange but fund, CBO, um, CME. Yeah, all it said. Yeah, for a fact, this is what I just showed you here is correct for a fact. Small is small orders, like smaller accounts. Smaller accounts, obviously, on this is still pretty large, but in regards to these two other possible accounts, it's probably pretty small. So that's huge. This inverse relationship here is pretty drastic in my opinion, and I don't like it. In regards to confidence in what I want to see for a bullish move, a continuation up without some sort of retrace to either get those. Like I said, not all the time is the smaller people or essence retail wrong, but short funds. That's very interesting. Yeah, there's not very many shorts on small accounts. So let's pull this up too. I want to show you this. I guess I can just pull this over. This is a good. So we see there's another. It's been last time we had a rise like this. We had a decent drop here, but the same thing's happening here. What's this blue one? Others. This one. So we notice both shorts, others, and the funding of funds. So I'm guessing funds means like the largest accounts you could possibly have on CMO and CBO, CME and CBO. And I'm assuming that others are all other accounts that are not included to be small or large, aka funds, trust funds and stuff. So if again, it's not all the time that the retail is wrong, but you could make a better living off betting against retail than you would against betting against um, like trust funds and like the big players. You know, the players that are not considered retail. You know, in my opinion, you have a better outcome in regards to what you want if you just followed what the retail did not do. So all I wanted to do is just see if this helped us, give us more ideas and what could happen, and it does. It helps me formulate some other ideas in regards to um, not fundamental. I mean, yes, it is fundamental, but also I want to do something else. I have another. Hold on, I need to find this page. It's right here. I got it. So that's very interesting. So it said, I know, like I said, it's not always that it's wrong. Most of the time, you want to bet against it. On this page, we got Bitcoin with the 80% long and 20% on short. So I'm just looking over a little bit, trying to understand this data. I don't understand why the number of longs dropped like a rock like that. Makes no sense. It's like everybody was long and they just cashed out. Or all their stops were hit. That's probably what happened. That's probably what happened. They were long on this base and all their stops were taken out. And then price moved and then they were less chasing a little bit. Shoot. So, again. See, I like to. Let me show you something real quick. Again, I really like um how this chart is compared to this chart. Look, they're different. Very different. Or I guess those are the same. I wonder why it's like that. You notice how those three are different? Those first three, and then these three are different. Oh, this one's not different. This one's similar to that one, but I wonder why these two are different. Notice that? I wonder why. I mean, this is gold and Bitcoin. They're two different things in regards to like that aspect, but see, there's not so much of a inverse relationship in regards to this as there is all. See how? Notice this. Look at this. Look at this. As this is going up, this is going down. As this is going down, it's going up, right? This is going up, it's going down, right? Correct, correct, correct. So when you go over here, it's not really doing that. Notice that? It's not really doing that. Maybe the scale's a little off, and like I said, it looks different. You know, it looks very different. It's very vastly different. So it's very hard to um, and you know there's a divergence on this too. We got a higher high on price, but a lower high on open position longs. So that is also something to be aware of. I hate that the short line isn't also up here. It makes no sense. It does that. You know, it's it's like this chart's so much prettier to look at. You know, that's so much prettier to look at. That's just such a huge gap. Okay, let's do one last check for sentiment, not sentiment check, but I guess it's called sentiment check. And then I'll get to Ethereum real quick, and then we'll hit Neo and Litecoin, and then DXY, and then I'll probably have to get out of here, maybe. If y'all have any questions, obviously I'll answer questions, but. Hold on. Some of this. Okay. Give it to a second to load. It takes a little bit. There's a possibility here. Something like that. Maybe. The reason why I'm throwing this up there is just to get another visual on. Another good way is this. Hold on. See, there's a vast amount of longs in comparison to shorts. I'm gonna get rid of this for a little bit. I'm also gonna get rid of these. Go on a daily. I guess I should have done that. Takes a little bit too long for it to load. When I'm with you. Nope, 10 hours better. Takes too long to load. If you're confused on what I'm doing, I'm just checking things, okay? Make sure everything makes sense in regards to what I want to see. It's dwindling down. Like the ratio has gotten less, has been raising, but nothing significant. All right, so now let's get rid of these because it's not really showing us much on these either. And for me, it would just be healthy if this went that way a little bit more and then came back down that way. But it's not always that way, right? So let's throw up. How is it now? Okay, one thing I wanted to go over. I covered it earlier, but I didn't really go over it. Was this divergence that's being seen here? First of all, I think that am I using the right? Hold on, hold on, hold on. I'm trying to figure out why I got one less divergence calls on this on that RSI than I did on this one right here. Oh, cause I'm on a daily. I'm on a 10. Oh. Oh, there shouldn't be a difference between those. Hold on, I'm gonna double check something real quick. There should be no difference between these two. Yeah, it should be basically, yeah, no difference between those two. And I was just making sure there wasn't. Well, there is right down the line. See that? Notice that line is very much different. I wonder why. I'm about to go back and check why. Why the red line's slower on this one. I'll check that later, but I was very curious that the SRSI, or the one I have you using, because I built it. I build one that I use in the background that I always fuck with 24/7, and constantly try to do shit with. And then I have the one that I let out for you all to have until I'm done fucking with the one I'm fucking with. Then I got it to a point where I'm going to get to. Um, so I didn't notice that this. I thought I had everything the same as mine. Well, it looks like we have to do a little difference here. It's just with the 21 moving our special moving average here. You see on the one I've been using is a little bit faster than the one you guys were using right here. And again, not by much, but it does make a difference. Maybe if I do this, let's check this. And that was closer. Oh, that's really close. But all the flip means is that you're flipping from a traditional RSI to the SRSI, or the one I've built. That's all it means. This is regular RSI. That's the secret sauce RSI, or the one I built for us. And all this means is your 21 moving average, short or long, short or long, short or long, short or long. So I think that's what the difference was here. Let's check it. No, look, it's different. Long is even longer. So I'll have to look that up. I'll have to look why it's it. Shouldn't be that big of a deal. The only difference is that you won't get this. It's the blue call as soon as you would have wanted this on the one I have. And usually these are pretty reliable here. These red circles are pretty reliable within 2 to 3 candle closes. We hit here and within 1 we fell. Here, 1, 2. So we hit it here and fell. Hit here, we didn't fall. And you know what I said? Once we get a divergence, your divergence should play out within 2 to 3 candle closes of your divergence call. Since we got our divergence call right here, bang. We have 2 to 3 candles to decide if this is going to be true or not. And this is why I think this is a short is better than a long at this point in terms of both R to R and just structure, internal structure. Like I said, I think it's definitely a 1 maybe, or even more. It's X and it comes down a lot bigger. But we have dwindling volume, bear cross on our side with bear divergence calls right here, and the circle ones to be exact, not just the plus and minuses, the circle ones. Because the plus and minus ones they're alright, but they're not as good as so we had a bear call here, but we didn't go anywhere. See, bear call, 2, 3 candles didn't go south, and we went up. Bear call, 1, 2, and got another bear call, and then on the third one he fell. Bear call here, 1, 2. We're gonna third candle. So, in regards to time and everything, I do expect us to have a little bit of a pullback here before we have a bigger move up to just chase some people trying to get an easy win and an easy long here. They're not going to make it easy for you. They're going to make it as difficult as it is to hold on to position, as difficult it is to make you believe that it is a bullish move. It's going to be they're not. I don't think they're going to give it to you this easy. I just don't think so. And I feel like this floor right here is going to break on our side. It actually already is breaking. Which is not good. So with that, I see a pullback. I don't know if it's going to be a WXY pullback like this, when like a zigzag coming down and breaks this low here. That'll be our best bet in regards to like win percentage, you know. But it is a very high possibility that this is a 1, and we only come down to this 0.5 here, a 5, 1, 3, 3, 2, 4. As for wave 2, what the hell? Somebody sent me an address. Hold on. Sorry. Sorry, I just got a message. Anyways, yeah, I just think, like I said, you don't want to be holding the position as a primary position. Sorry, I keep getting messages for this person blowing me up. But yeah, I think this is gonna be what's gonna happen. Like I said, I think this is a more of this internal structure right here is calling for at least this right here to be touched. And if if this 1-2 is wrong, then we could expect this WXY to play out in one or two ways: a triangle sideways or a zigzag coming down. Since this was a flat here and a W, we're expecting a Y to be different, either a triangle or a zigzag. And so the only two ways a triangle happens is if we go sideways from this point like this, or the only other way is if we break down and zigzag and get to this low here. And then, like I said, there's a possibility that we have a 1-2 where we get to this. But in my opinion, since both of our counts bearishly and bullishly say there's an intermediate correction coming to the downside, I believe a short is better in terms of scalping at this moment. And then you probably just want to set yourself up to a long down here, maybe. Maybe I'd probably wait for confirmation. To me, I would just really like this to be tagged for liquidity. These wicks right here just look like they want to be 8 and up. With the way this rounded up like this, like you know how this hit hard and this rounded like this? To me, this tells me that these lows want to get taken out right here. But like I said, if we consistently close above this range like this and make this triangle, what we would create here is in essence a bulldog formation. A bulldog formation. And this will break up. And a bulldog formation in essence is like a small impulsive structure. 1-2, 1-2 kind of thing. But obviously it's not a 1-2, but so bang bang, bang bang. Yeah, just look at this. What they have positive here is this, look. Here to here, right? There to there. Correct? But so far we haven't got anywhere. Hit that low here, and it's been 3 candle closes, or 3 candles. This is gonna be this next close will be our 3rd candle close. And if we don't break above, I think this will be our break low candle here. I do. Alright. Alright. That's it for Bitcoin. What's going on here, huh? So I saw a possible count post that they're asking if this was 1, 2, 3, 4, 5. Then we're going A, B, C. That would be gnarly. That'd be absolutely gnarly. 1, 2, 3, 4, 5. I mean, sure that does make a 5 of impulse. Sure that makes a 5 of impulse. Sure that makes a 5 of impulse. It does work. So I won't lie to that. I won't be that guy and say it won't. And I hit a perfect time frame analysis in order to be considered 1, 2, 3, 4. Hit that 666 time frame we wanted for a low, and we move back up from that point on. Applicable for wave 4, system wave 2. So this count does work. It does work very well. What's good is from this high here to this high, it got an increase in volume. But again, same thing here. It's just lack of interest as prices continues to get more contracted here. less interest involved into the market. And it makes sense. People don't know what's happening, so they want to have some clarity before they enter the market. So we don't have a divergence call off this one. Although this should in essence be a divergence call from this high to this high. So your X was here, X low is here. It was hit and taken out, and so let's do this as well. I have to get in there and really clean it up, huh? Sorry for the mess. I mean, this worked out fine for us, so thank God that this setup worked for us. Wouldn't get below above this, and that worked fine. But are we really getting anywhere south that we... No, we're not really doing much with this. It's obviously not WXY, because it would have broke south already. This could still be 1 through 4 here. 1 through 5, man. So that's Y here in the yellow. We'll finish a W of a larger leg, and this will be X, and then move for Y down. Like I said, W, X, Y, A, B, C. And I guess it a little surpasses what we want for it, so I don't really like it. Bitcoin, Ethereum looks more like shit than Bitcoin does. That's all I know. It looks like absolute garbage. To try to get a clear and concise read off of. What is very important was this divergence here, and then here. X range lows right here, and we're taking out, and we're closing below right now. So if we cannot close above that, then we're probably gonna do that. I don't know if we're gonna hit this box right here, but we'll probably move down at least to the 0.618 of this current move up, which brings us where? Starting not that far. Look at this, bang. Oh Jesus, it's great. What in the heavens? Like I said, I think a short is better at this point in terms of scalping. You don't want to hold anything significant in the short because we don't really know if it's going to be a 1-2 1-2 like this, or it's going to be like I said, WX and a Y coming down for ABC. A B C. So we really don't know at this point, and there's no real easy way to tell at this point. All I know is that this current structure right here looks kind of bearish, pretty bearish. We broke underneath this right here. We're creating now this bearish divergence here off here. Notice how it's higher here like this, but here we're lower like that. So, like I said, a short scalp would be much wiser than a long here for both Bitcoin and Ethereum. Let's see here. Bro, How do I take profits on Chevy? First of all, you're overcomplicating this shit. Overcomplicating this shit, bro. All you do is you put this motherfucker up. Put them up. At alert. Chevy XV. Close long, close short. One of those two. That's it. Close your longs. Close your shorts. Set those alerts up. That'll tell you. It'll fire to your bot. If you have it set up to your email. Right here. Make sure you have it linked to your account on TradingView. And then that to your bot. Or whatever. You don't have to use a bot. You can just use these alerts here to fire to you. So, close long, close short. All that means is it's just a closing order. Just red is red X, or just blue what the fuck, green X. And re-long, re-short, all that is telling you to re-enter position. So see how this S is here, S is here, and S is here. That's just re-short or re-long. So re-long obviously are L's, re-shorts are obviously shorts. And your initial short call is missed on these because this is an indicator and not a strategy. And a strategy might get you like one bar before, and that's why the strategy is better in terms of percent win profitability. The strategy is like an 88 to 94%, where this version is like a 66 to 75%, which is still very good. A lot of, I guarantee you, ask any 80% of traders out there, they'll love to be 60%. They'll kill, they'll die to be 70% win profitable. I'm not saying profitability in terms of gross allocation, but in terms of just win percentage against your losses. You would love to be that 60 to 70%. So this, in my opinion, will help you do that with very little effort. So let's just move these up. Top. Okay. So scroll down. Yeah, I gotta go to bed soon too, bro. I have to wake up early as fuck tomorrow to go to the DMV before everybody gets there, so I have time to do everything I need to do tomorrow. I need to register a car. I need to get my ID changed to a different address. Then I gotta go get my car my new Jeep registered. Not new Jeep, it's an older Jeep, but it's newer in regards to my possession. And then try to get back here to get back to you guys. But anyways, yeah. So it's pretty simple. This, you don't have to worry about this. Actually, you might have to. I didn't notice this. Condition. So what if we do here? What if we go long, we go... See, that's so weird. Obviously, this is... I wonder if it's getting... They're like double calling them right here. I have a feeling that these are accidentally the same thing. This long stopped and closed short, or closed long, are the same thing. I need to figure it out to make sure. I apologize for that. I thought I had it set up right. Maybe I don't. Yeah, I'm gonna practice. I'm gonna do it for myself. I'm gonna set one up for myself. See if it works. Let's go. Okay. Right now it's bear, so let's go Chevy XV, obviously. Short. So we'll do this. So, I apologize for that. Hey, good night, Noza. Good night, McMahon. Appreciate you coming in, bro. Gave you 2 messages, bro. But yeah, I'll see how this works. That alert is set. I could look at something real quick. Let me see if I can see something real quick. I can probably get to the bottom of this real quick to figure out what's what. Okay. So, I think I got it real quick. Let me close long. Okay, open longs, which equal it says relong, are also just long. So I'll change that real quick so we're not confused. And same thing with short, reshort. Reshort should be just short. Okay, I told you they were the same. I knew it. So oh, I need to put one more alert on too. I'm about to do some editing to a Chevy. I want to get out of here. I'm not gonna do it right now. It's take too much time. But I just noticed I have to do some editing to it to get the alerts right. I need to add uh, a new alert for one of the conditions, and then I also have to add a condition for one of the alerts. Because I have an alert here that doesn't have a condition. Have a close open long and close open shorts condition for alerts, but I don't have the condition actually set to be shown on the chart. And I don't feel like doing that right now. So I'm just gonna bring this back over. peep this real quick. Possibility this is a lead diagonal. This eh. Typically your wave 1's the longest. Right now your wave 3 is the longest. 1, 2, 3. So I don't really like it leading diagonal. We'll see what happens here. Possibly A, B, C this way. This was like too much of a 5-wave impulse there to be anything but a 5-wave impulse. So A, B, C, or 1, 2, 3, 4, 5. Like I said, we'll see. Yeah, and my bad, bro. I didn't know I fucked up on it. I did not know I fucked up on it. But yeah, I just need to add one alert so you could see it, so you could set it up. So we're missing one. Like I said, we're missing one alert. We should have one more call here, called uh long close. Just close long, because this here long stop is your stop, obviously, which is this X and the here. But now we want to see close long, which is a conditional close for another type of profit taking. All right, but even from that, even this is the way it is right now, it'll do good. It'll do you wonders. Like let's just do some. When I introduced this, what was it, like last week? No, I introduced it here when I first introduced this Chevy. So you would have got stopped out here. You went long here, got stopped out here. Cool. Told you to go short here. You obviously missed the first breakdown. That's cool. That's fine. You missed that first one. Cool. Bounce back. Chevy told you to short on this candle right here. Right here. Right there. So you want to enter short somewhere here. Depending on your stop, it'll be wise if you use your ATR. Hold on. Just might skew up my chart a little bit, so excuse me, my chart is a little skewed up here. Okay. So on this candle we entered here, right? And the current ATR for this candle was 1.87. So you just take 1.87 and just follow the formula I have right there in the corner. It says stop loss equals ATR times 1.55 plus or minus the close of your current candle you entered in. And the closer you can get it to the previous close, so like if a candle closed and it's already been like it's almost about to be the next candle close, you better just wait for that candle to close to get a new ATR reading, because it updates every candle close. Okay. So on this particular one, it was at 1.87. So you take 1.87. Well, this is how you get your stop, okay? Without Elliott wave, because I use Elliott wave to determine my stops. But if you don't have a good understanding of Elliott wave, then this is how I would advise you to use your stops in terms of volatility and trying to get yourself outside the range of like the getting wicked out. So again, 1.87 times 1.55 equals 2.821. So this candle closed here was 175.1. So plus 175.70. And let's see what that gets. Let's see if we got wicked out there. We might have got wicked out here. Maybe. It usually gets us really fucking close within the range. That was our stop right there. Using this formula and this entry, you would have got you that stop just outside that range, and then you'd have just rode it. What the hell is this line? What's this? Do you see this weird line right there? It's weird. That's weird. But yeah, so, like I said, you would have entered here. Your stop would have been right there. And then you would have shot for whatever you wanted to shoot for it. Chevy didn't tell you to enter. It closed until here when I told you to long, and you would just close your position short, obviously. It didn't give you a closing stop call. Could have never hit the requirement. A certain criteria of volatility has to be met and then diminished in order for one of these calls to get called. And then it happened to here. Volatility happened here, and it didn't diminish until here, and that's when we started getting these calls. Because the volatility was gone. And the reason why I set it up like that, so because a lot of the times with our old scripts is volatility would happen, and then we'll start correcting, and we will take profit down here. When we entered the trade here, took all this right up, and then we didn't take profit till down there. So we only gained this amount of price of gains when we had all of that left on the table. And so I developed this script so it could take profit up here instead of down here. When the notice of the trend is shifted. So short. Told you long here. I probably would have just closed my short since it was heavy short. Probably just close my short and then just reassess what happened. Again, this is the 15 minutes, so it's not going to give you you probably want to stick to 15 minutes. Pretty good. It's pretty solid. It is. It's not going to lie. It is pretty solid. Pretty solid. But sometimes you get washed up like this. You get a long here. And so let's say if you enter this long here and you do the exact same rules as before. Long here. You might out here, right there. Right there, that exact candle right here. So the ATR of this one was 0.98, 0.95. Times 1.55 equals 1.44. And the close of this candle was 164.42. So what's that equal? So it's a close 164.42. 164.42 minus 1.4415. So I'm pretty sure this one got you stopped out. That's fine, because that means you're listening to the rules, and that's fine. We don't want to ever not listen to our rules, because once we do that, we start really losing. Yeah, so you would have got stopped out for a super small loss. That's fine. Half a percent, 0.7%, it's fine. And I did tell you short here, and short here, but then you got stopped out right here probably with the same range, ATR range. So you probably just got washed out. This is why you'd probably want to stick to a little bit, like 30 minutes to 1 hour. But like I said, you can possibly make a good killing off this. You just would get a lot of bullshit trades in the middle in comparison to like a good trade. You get like a lot of little trades and then your big trade, you know. So like, again, you went long here. You probably got stopped out like right there, where I told you to go short. Told you to go short here and then take your profit right after. Same thing here, told you long. Possibly got stopped out here. Possibly told you to short. Possibly got stopped out here, went into the long. Long, and this would have been your first good long. First good trade in this actually since this trade here. All these have been washes. That's been a wash, 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 wash. All these are washes. Well, except this last one. This last one was a good one. Well, these last two were good. Except you were short here, so you probably would have been a stop out, and then you entered here. And I told you to take profit on this candle right there, which is pretty low. Yeah, ATRs manually. You have to manually do that. I have we have the hidden ATRs for our CCV. All you guys should have it for free. And if you guys don't, just tell me and I'll add you. I thought I had it for free, but it's right here, hidden ATR. I'm pretty sure it's free already. Just double check. Pretty sure I have it here somewhere. Yeah, right here. Hidden average true range right here. Hidden is free. What is this? What? This is Ethereum. Yeah, kind of similar. I just wanted to see. I wanted to see. So it's pretty simple. Use it. It helps you determine your stop loss placement, and it usually gives you a really good tight stop with like just outside of volatility, or like just within it, so you get optimal stop out position and not like hurt your account so bad with your stop. Yeah, like just listening to this would have been pretty solid. Like, yeah, this one, it told you to take profit a little bit too soon here. I don't know why. It should have been telling you up here what happens like that. So if you wouldn't have taken profit there, you would have kept adding that position from here up to this S right here. So you would have took profit there possibly. Nice quick S. You would have went short here probably. And then you definitely would have held this position because your ATR would have set you right above that. Would have went short. You would have got scared right here a little bit, but then would have tanked down and you would have really locked in these gains here. Boom, boom, boom. And you could have long this, and you probably would have held that one pretty well too. This one S might have got you scared. You might have take your position out right here. Who knows? It's on you. This position here would have garnered pretty well. So it told you to go short or take your position off. And again, told you long here. Take profit there. It's only a 2% gain, but hey, again, it told you short here. Take profit here. It was a small take profit zone. Next drop was down here, which is better, but it didn't tell you to take profit. So you might have got washed out here because now you only got like a 1% gain, which is all right. And then yeah, so forth, so forth, so forth, so forth. You would have shorted here. Possibly would have shorted here. like this, and this long might have scared you, but there's so much short here. See all this red on the candles too. You want those not to be red when you're going long. And then until you take profit here and here for an after different gain. Right now it's telling us a long. So currently Chevy is telling us a long, which told us long here, right there, and on this candle, which is just a little bit higher. So we would have entered an average here, be up 0.7%. Not too positive what this structure could be. I'm gonna be very curious as to the how this breaks. I'm actually gonna press some stop sales at the low here. I'm gonna show you. So, if this is indeed a start of impulse, we should not retrace more than this 7/8 right here. This red box down here, like that, right? This is a 1-2 leading diagonal. 1, 2, leading diagonal here. Leading expanding diagonal where wave 5 does not hit the boundary of 1-3, but it does break below the boundary of 0-2. Boom. So another key to this is the retrace of 2. It usually has got to retrace more than the golden box. The golden box is, if I'm not mistaken, right here. So I guess I'll just do I'll do it correctly. Better be right. Ooh, flipped wrong. Yeah, so right there, like I said. Like that. So if this is gonna be a 1-2, we will wick into this range, possibly close like an hourly or less below this, but we will not get below this red zone at all. And that's why I'm saying I'm gonna put stop sales like right here. I don't know. No, I'm not. Actually, no, it's dumb. If anything, you want to go short now, in hopes, not hopes, but in an idea that this is the A, B, C, and then this is creating this one of that. But if it does not break this low here, in this red down here at 166, then I'm pretty positive we're going to create this 1-2 here, come up for 3, and so forth. All right. This would be pretty vicious. This 1-2, this 3 right here will be fucking huge, like this. Like you'll know this is the impulse. It'd be like that. 2, 3, 4, 5. 1, 2, 3. And the Ethereum's ABC flat works well too. ABC. Perfect algo flat target hit. Perfect. Literally perfect to the T. So this 1, 2, 3, 4. See, that's what's confusing. Is this 1, 2, 3, 4, 5? It kind of diagonals. It's not bad. It's not bad. I like it for a leading diagonal or wave 1. 1, 2, 3, 4, 5. This is very ugly. I'm not. This is like It's not the prettiest, I'm just letting you know that. But it does work for an ABC. I mean, 1 through 5, this being ABC flat. Perfect algo kisses from this side and this side, both ways. So watch this here. Watch this 1, 2 here. But yeah, that's pretty much it for Ethereum and Bitcoin. Nothing has really changed in regards to like the entire aspects of it. We're just trying to find out when we can hold on to a long for good. That's all we're trying to figure out. If you got in right here when I posed the VRT pivot flip on the H2 chart in Bitcoin, then you could still be holding that position if you would want, because like I said, it could still be a 1-2. But in my opinion, I would have already exited the entire position somewhere up here. Yeah, we'll see how this goes. We'll see how this goes. Let's peep Litecoin. I'm pretty sure it died a little bit. So we hit this the lowest low we could possibly go for, in my opinion. WXYXZ ABCX. See, that's way too long for AWX, so it has to be ABC. So A, B, C. One more low. We've been caught saying that like twice though, so we gotta be careful. Probably like a double bottom like that. I don't think we'll get lower like that. Something like that maybe. I like how we broke out of this trend line and retested it. And we're still within the confines of the Bermuda Triangle, which is good. As long as we stay in the Bermuda Triangle, we're fine. We want to hold these trend lines though, obviously. But this works. I like this a lot for Litecoin. A and B being very similar in time, and C being very vastly different because it's shorter or longer, depending. This time will be shorter in my opinion. And we got some pretty good hidden bullish divergence, not hidden, regular bullish divergence here. Double bottom. So that means that you'd expect. Here's your X pivot. If you consistently close above this zone here on Litecoin, it's go time for Litecoin. So if Litecoin can just go boop, go time. It's just how it is. 0, 1, 2, or the 1, 2. So X is somewhere within this leg. I like those pivot. I like this range right here. Boom, boom. So if price go over that, clear it, and it's go time. But I think it's due for one more small low for Litecoin, and then maybe Litecoin will start moving and start showing us where the market wants to go. So we got to have one more low Not expected. Very confusing count though. 1, 2, 3, 4, 5. A, B, C, W, X, Y. It's very difficult. This one's just as difficult, if not as more difficult to count. And you can't consider this 3 in any sort of form. That's longer. That's so yeah. It can't be 1, 2, 3, 4, 5 now. It has to be A, B, C, or 1, 2, 3. Working on 3. 1, 2, 3, 4, 5. 1 to 2. Same thing here though. We got pretty good divergence here. If I was gonna take a pivot, I would call it right here, and I would say any consistently closing that over that on this time frame like this, and just go time again. Simple as that. How long have I been talking for this year? Damn, I've been talking for 2 hours. Holy crap. Time flies. So yeah, as long as this channel is held for Neo's and this line right here I have is we're pretty solid to move up. If we consistently start closing beneath this line here at $10.23, then I will invalidate all bullishness, and I'll probably say this could consolidate, and break down eventually hard. And this probably was like a so either 1, 2, 3, A, B, C, 1, 2, 3, 4, 5, and this creates A or 1, B or 2, C or 3. It's only if we lose this channel like this, I'm willing to say that. And if we hit this pivot right here, this exact pivot right there, if we hit that pivot right there, as well as breaking this channel, then I'm willing to say that this is done. We're no longer bullish. Alright. That's essentially it for the currency, cryptos. It really is. There's not much to be changed or alluded to. The structure is still very much the same. Nothing's scaring me. Yeah, there's some other implications that it could be a smaller correction in our current time, like a more recent time, or a more like coming to time. Whatever you call it. I'm tired. Sorry, I'm tired. All right, leave me alone. Yeah, I don't even know what I'm talking about. I'm tired. Okay. So, I'll take a peep at good old DXY, see if she's still following my implications from previously. And she did move up a little bit higher. Last time we were talking over here, but now we're flagging a bit. And we do have some little bearishness here. Higher highs. So this tells me this could possibly be an ABC still. Something like this. Yeah, this one is definitely a pickle dick, because this one's definitely difficult. I'm not gonna lie, this one's definitely a difficult one to gauge at the moment, especially with all the unknowingness around the world in regards to trade tariffs and stuff like that. But yeah, watch this low right here. What's up? No, I don't. I don't use that at all. I used to use my eyes. I don't need it. BRT, all it does is tell you exactly what I tell you with this, by itself, but what VRT can't do and what VRS, which is the VRS, I use VRT. Understand the difference. VRT, valley, range, C or re, is the theory I always go over consistently every single time I pull up these charts with divergence. 0, 1, 2, X. X was taken out. More lows to come. Same thing here. 0, 1, 2. X is somewhere right here. If this low manages to break below like that, then this could go a little bit lower than we were expecting here. And now a VRS system is our indicator that I built off of this idea of VRT. Oh, and I forgot, mine's not updated, and yours is updated. I guess. So all this tells you is if you have a positive or a negative in the current points of price action and RSI, obviously. And if it gives you a positive, which is obviously a positive, then you're more likely to go up. If it gives you a negative, then you're more likely to go down. If you have consistently negative showings, then you're really more likely to go down. If you have consistently showing positives, then you're more likely to go down, go up. And this is a single call type of indicator. Obviously, if it has more in a row, 3 in a row, it's probably going to be a good indication. And you usually don't want to start flipping the other way until the trend gets flipped the other way like this. So like you'd be short, 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 and then since it started going blue, you would only be taking longs. So you got three long calls in a row. So you would take a long here, use VRT, average true range to get you out of the range for a stop loss. And then you would have rode it all the way until it gives you 2 reds in a row, like right here, or a red cloud. Either one, it's your choice. And so you could have took a profit here or here, and it's a very solid indicator. I'm telling you guys this. The indicators I built for y'all are top notch, and I'm not lying. I really devoted my time and effort into building the best possible scripts and indicators for you to use to understand what's happening in the market. And I built multiple indicators to help everybody's personal type of trading style, because I know everybody doesn't trade the same. So I try to build an indicator for every single person to use to help build a system out of. Now, with those indicators, I've also given you clues on how to use them, and I've given you, in essence, I've given you systems to use those indicators with. Being Chevy, you just follow the calls. Being this one, you follow two blues or 2 reds in a row plus the cloud flip, and you go into that position, so on and so forth. Top Goon with the trend shifting type things. What else is there? It's another good one. ZR1 with the bull and bear on calls. They're all good indicators, all solid. It's just, do you have the patience to trade with them? Do you want to trade like that? Are you satisfied with trading that way? Now the profitability there, it's gonna be there. It's gonna be there. The key is just managing your position and managing your money. And if you do that, then you're gonna be profitable. So again, like you would have entered here 3 in a row, entered here somewhere in the close, captured all this, exited on 2. You didn't get 2 reds in a row, so you would have went short. You got 2 blues in a row, so you would have went long here. Appreciate that, dude. I really do. I really tried hard to really devote my time and effort to giving you guys the best possible tools to use out there. Um, um, and I appreciate that a lot, my guy. I really do. I really appreciate that you're able to understand what I'm trying to uh, tell you all, because I could sit here and ramble for hours and hours and hours and hours and hours, but if you guys can't understand or if I can't teach you what I'm freaking talking about or trying to show you, then what's the point of me talking, right? So I'm very glad that not only you, but I know there's a few other people out there who are saying like they're able to grasp things more efficiently and more accurately now that they've been in the group. Not only because of me, but because of Sean, Gunner, and Warrior. So we appreciate that a lot. That's what we really want to show you guys is how to fish. Yes, we can show you calls and stuff like that, but we want to show you how to do it for yourself so you get more comfortable in our calls as well. So if you see our call, then you can do your own homework and like, okay, I see this too, and then you can be more comfortable entering that trade. So again, let's keep running with this. Again, you wouldn't have went short here, but you would have went long. You got 2 in a row, so you would have went long here on this close. And then it was a bunch of wishy-washy. You got 2 reds in a row, so you could have exited here for a small, probably you would have a loss because of fees. Or you could, this would have been a wash here, you know. This would have been a wash because you would have got stopped out right here, or you would have got exited here. Either one depending on how you are. And so all you're waiting is for 2 reds in a row, or yeah, in my opinion, 2 reds in a row. You could sometimes get away with a skip in the middle with a cloud. So like, if there's a red skip, a red, a skip, and a red, you could get away with that sometimes. But you have to be very careful on where you put your stops because this happens right there. It kind of runs out, comes back through. You didn't get your official 2 closing bear call to right here, so you would have entered here, which is not horrible, but you did enter like in regards to the top and bottom. You did enter late, but this is not a top and bottom picking indicator. It is on a higher time frame, but on a smaller time frame, it's not. So you would have entered here, and you got 2 in a row here, but it's still red. You don't have to exit that. 2 in a row down here, 2 in a row down here. So you could have exited on any one of those down there. The only reason I say that is because you got a red call. Usually when it's red, like, it likes to flip sometimes, so just be careful on the colors of your candles being changed. So you would have exited here, whatever. Say you exited here, the first one. And then you entered, you got a blue, and a blue. You got 3 blues in a row, and you got a peak of blue cloud. You could enter that. I probably would wait a little bit more to see what happens. You got 2 reds, and you got 2 more blues. Plus the cloud, so yeah, you would enter that. That's all your criteria you need to enter. Again, 2 reds, could have exited, don't have to since you have the cloud still and SARP supporting you. Same thing, 2 reds, could have exited, don't have to, it's on you. And it was flippy floppy over here, and then bulls won again. Boom, and then red, red, red. 3 reds in a row, you probably want to get out. It don't matter if it's on blue or if it's 4 reds in a row, definitely get out. If it's 3 reds, because you probably want to get out. If it's 2 reds, like I said, you don't have to, but you may consider it. But consider taking profit at least. 2 reds, 3 reds, you're out. 4 reds, you're definitely out. You got 2 blues here, so you could have went long. Notice how this cloud is diminishing. So the cloud is momentum, okay? So if your momentum's lessening, then obviously you might not want to be taking that long because your momentum is lessening. So especially after you got all these red calls, so just be aware of everything that this indicator is telling you. It tells a lot. It tells a lot. You just have to understand what it's trying to tell you, okay? And then same thing here. 5 reds in a row. Probably would want to take that. So you got 2 reds right here in the cloud, right here. So you probably would have took that. And then you may would, no, like I said, may have, may not. It's up to you. Right here, 4 blues in a row, took that profit. And then you got 2 reds again. Since the cloud was very small, you may or may not want to enter that. It's on you. You didn't have SAR resistance, so that's very like iffy right there. Usually you want SAR resistance plus the cloud, or SAR support plus the cloud to really give you that confidence of that 2 call. But say we did enter that anyways, and we exited right here when the 4 in a row happened. Another 0.6 degree call. And then right here, 2 reds in a row. We would enter there, short again, and we would have got that. And right here, 4 in a row. Exit right there. So we had 3 wins in a row with this call. With 3, actually 4 wins in a row with this. The same thing here. It's the same thing. It's over and over again. 3 reds, but we're on the top side blue, so you're not shorting. Wait, you're not shorting. You're just looking to exit if you're on that side. Then you got 2 blues in a row. You could have entered. You may well have got stopped out because you entered here on that close, depending on where your stop loss there. You might have been really close to getting stopped out. All those reds, flippy floppy, wishy washy. It could have been on you to exit or not. You had SAR support plus the cloud, so you would have been okay to stay. All these blues in a row, 3 blues in a row. Time to go time, and then you capture all of that. You don't get a flip here or 4 reds until here, so it's on you to exit that call either here or here, both at the same spot basically, so it doesn't really matter. And then here you got 1, 2, almost 3 in a row. You have 2 in a row right here, so this would be your first loss. 2 in a row plus cloud plus SAR, you would have entered that. So you would have lost. This is your first loss here. You would have entered this short here, and you would have got stopped out here. And then it would have told you to long here, and then you possibly got stopped out here. But you, three pluses plus cloud plus SAR. Then on the flop side, immediately you got 2 X's, a plus, and then 2 more X's, and then we're now closing beneath your entry point, so you probably wouldn't want to exit, and then you saw the rest after that when it fell more. So it's a pretty straightforward indicator to follow. Like at this point, we'll be in a long, but it just gave us 2 reds, so it is a very, very likely possibility that this comes down, because this gave us 2 reds. Specifically, if you get another red right now, if you get 3 reds in a row, and then specifically get 4 reds in a row. If you get 4 reds in a row, then this is definitely coming down. Jesus Christ. Oh God. I just dropped water everywhere. Oh my God. And with that, guys, I'm signing out. Oh, hold on. Pause. Jesus. Jesus Christ. Hold on. Pause. I dropped water everywhere. Oh my dear Lord. Oh, I was just trying to get a drink of water and I moved too far. Oh God, no. No. Jesus Christ, that was crazy. Hold on, again, pause, I'm sorry. I'm a klutz and I happen to do this. Pause. Ay, ay, ay. Okay. Jesus. Oh. Okay. Good enough. Alright. So yeah, like, again, I appreciate that, Infamous. I really do, man. I really appreciate that. That stuff makes me, it drives me to continue to do good work. Like I said, I don't have to do this. I don't at all. I'll be perfectly fine. I mean, I'd rather do it. I like doing this. Don't get me wrong. I love teaching people. I love sharing my knowledge. I love it. But do I need to do it? No, I don't. I don't need to do it. I don't need to do it. But I like to do it. That's why I'm here. So when you guys give me feedback like that, it does drive me to do more and try to be better. It does. It really does. And in terms of teaching aspects. Oh, and then didn't someone wanted me to cover um something? Hold on, let me see if I can find it real quick. Damn. Yeah. That was. I'll check that out real quick before we get. Okay. Oh yeah. Mason asked if I could do a tutorial real quick on channeling with VRT on a single divergence on the bullish side. So let's just go back to this, I guess. Look at that. I got divergence here too. So I'm expecting at least this to get tagged here. And if this gets tagged and broken below like that, then this is coming down further like that. It's just how it is. So let's go on a 10 hour. Let's just go replay. It's right there, I guess. I have no idea where it's at. Let's see what happens. Okay, our first goal is we need to find some sort of divergence, right? Right now we're at a 10 hour. In order to play the game, we have to get some sort of extreme or some sort of divergent scene to play the game. Okay? And if we don't get either of those, then we can't play the game. We possibly have a setup here with this extreme being pretty low. So you can maybe take this. So you take it from your initial pivot from your break low or your break, take it to your new low or your low or what you think is going to be your divergence. Because right now we don't know, but we think since we have an extreme, we can get a divergence. We have an extreme, so we think we can get a divergence like that, while this goes like this to create that divergence. And don't remember what happens here. I don't think that's. I think this goes up a little bit. Oh yeah, and you also want to do it on price action. Draw your corresponding points of price action. On close too. Sorry, I had a little itch. Okay, so at this point, notice how RSI is trapped inside the channel, but this is not. So this tells me that there is some. I think it's gonna come down. Honestly, I do. See what happens here. I think it's gonna come down. I don't remember. Got some pretty nasty divergence here going on. Hit this low. Okay, let me also tell you another thing. This didn't give us a play here, but let's say if this happened, right? Let's say if we did make a new low, right? And we stayed inside, so above this median line, with RSI doing the same, or breaking out, either one, then that is confirmation that this divergence right there you're seeing is true. Or most likely going to be true. So let's just see if we get that play here. I don't know if we get that play here. I think this goes, if I'm remembering price action correctly, it goes up first, then it comes down. Yeah. So cheating, kind of no. Let's see if we get a divergence call anywhere. We haven't got any divergence calls anywhere. This wasn't a divergence at all. We guessed it was going to happen, but nothing happened. We didn't get that call. So that wasn't a peak. So now we're just looking for a peak possibly, or any sort of divergence call. Maybe we got one here, right here. Notice we got hidden bull off of divergence. That's the divergence. That's a flat top. That's divergence. So this might have room for one more high. But only if within the next 2 or 3 candles after this candle close, it moves up. If it doesn't close above this high in 2 to 3 candles, it won't go up above it. Okay, 1, 2, and let's see what this third one does. We're now on the 21 SMA. We're now extremely diverged. We're now getting into that range where we're going to break divergence. So far, the only divergence we have is this. Where is it? Right here. 0, 1, 2. And you can do this on any sort of thing. So your X pivot is probably right here. So again, on any form of divergence, you could do this, except it just gets confusing once you start throwing hidden divergences and stuff like that. Because then people get confused on where your pivots are and how do you write rules and how do you understand the rules and blah blah blah, yada yada yada. Okay, again, we got hidden bearish divergence, right? We got higher high here, but it's a lower high on price action, right? So that is divergence. So if we have divergence, we could use those points. 1, 0. 1's your extreme, 2 is your other extreme. 2 is usually your divergence leg. Your X pivot is usually within your divergence leg, and it's usually the most correlated point in price action, which is, in my opinion, within this little range right there. And so the theory is, once you get divergence within the next 2 to 4 candle closes of that time frame you're in, you get a break towards that X pivot, and if X pivot is attacked, so here's an X pivot right here on price action, and on our side is right here. So if on price action we could hit that with RSI hitting that at the same time, that confirms that this divergence you saw from here to here was true, most likely true, and you're all waiting for to confirm that, because you just got your X pivot swiped out by not only your RSI but also price action. And the key to the next move is the corresponding move after this initial breakdown cannot exceed the golden box retracement. So that golden box there, I know we don't know when it's going to end. I'm just throwing stuff out there for now. Another thing, see how this low right here, this low and close right here, this is your breaker to break it back up. Notice how the low right here on close was taken out by that bar right there. So that tells you that this range is now invalidated. This range was now, it's no longer a bullish range. It's now a neutral to bearish range until a move will be made. And obviously, we're leaning bearish right now with this bearish divergence up here. again, we do got some pretty hefty hidden bullish divergence from this low to that low, from this low to this low, and like I said, if we cannot move up above this close in 2 to 3 candle closes from this initial point right here. Right now we're at 3. We're on a third candle right now. Let's see where this one goes. Usually on the third candle it moves the direction you need to understand where it needs to go, and it moved down a little bit. So see what happens. So from this point, this is when you really want to throw in this box right here, and this is where you want to throw that up. So if as long as price stays below this, you're good in terms of bearishness. Okay, it's 12:30. I really need to get going pretty soon. And so like I said, you got divergence, you got your initial breakdown, right? You're hitting X pivot on RSI, but not price really. So that does tell you there's some strength in this zone still. There's still strength in this zone. Double bottom on RSI or slightly lower on RSI, while this has higher high on price action. And the key is, like I said, if you cannot move beyond 0.618 retracement of that current move down, then it's probably going to be this divergence that you've seen here from this low to that low is going to be false, and the bigger divergence from this high to this high is going to be true. So again, let's keep this running real quick. Oh yeah, that's the golden box. So as long as we stay beneath this, the short we entered from up top, because I said we were going to go short from here, is going to be good. And the real key is if RSI and price can both break underneath this zone, then we're really golden in terms of what we want. So as soon as that happened, oh god, I didn't know. So as soon as this happened, this X range was violated. You saw the rest. It was actually, to be honest, X range is probably a little bit higher. Cause remember, 0, 1. This entire range could be your X range. So I think X was actually right here. I think it was right here actually. Like that, literally that. That was X range. Bounce, bounce, taken out, close under, done. 1, 2, 3 is a killer. And so, okay, since we got an extreme here, see how I have an extreme, and it's now the most extreme. So now we can do exactly what I just went over previously, right there to right here. So let's just do this real quick. So let's take our channel, right? Oh, well, we can't do this yet. Yeah, we have to have the pivot. So we need 2 points to understand, or kind of get an understanding to what's going to happen. So we're just going to stick to our short. All I'm looking for is this to pivot up like this to give me a point to draw a trend line from this to this off this low to draw me a channel applicable to this, like that. So that's not really enough. Like I want something like this, something really drastic. This is probably a smaller time frame divergence type of thing. I was about to say that could have been enough, and it sucks that I pressed it right after like literally the last second. So if let's just say it was enough. Draw your channel, right? Has to be the breakdown high, or the start of your proposed start of your new trend, right? To your most current point of what you think is going to be the breaker of divergence, which is your 0, 1 point. It's always your extreme 1, right? So bang, hit your 1 point, And so the theory is, if RSI can stay above this median line and or break out of this channel with price action doing the same, then we're gonna have a bullish reversal. And notice how we're really under. So the likelihood of this reversing bullishly is very slim. Even though this is above and we have bullish divergence, the likelihood of us actually pulling it off is very slim due to the fact that we're underneath this channel median line. And it's not copying what this is telling us here. So let's keep it rolling. And so now we close underneath this. So I wouldn't be surprised if we get one more low to like right here, and then we actually make a divergence leg. Yeah, so one more low. Okay, like I assumed. It's not good when this happens. When this happens right here, this exact thing, when your price exceeds the channel or median line without your RSI doing it, it usually means your trend in that current direction is pretty fucking strong. So everybody sees this as divergence and shit, but I just see this as trend continuation until we get a breakout of the channel. Some of your most volatile moves come off divergence, bearish and bullish divergences. Like it'll be like RSI will be like on the bullish side, like dancing like this, while price is like this. It's falling. This keeps falling. It keeps falling, and you have no idea when it's gonna stop. Well, this will help you understand that a little bit better, along with VRT. But this is a step to get ahead. Remember, this is the steps you do before value range theory. Value range theory is a system you use after you have divergence. You use this channeling technique before you have divergence when you think you will set up into a divergence. Because this will help you understand if divergence is going to be true or false even before VRT can. Now, VRT's theory is once you have divergence, you make a break, no matter what, towards your X range low. So let's just say right now, this is our divergence, right? Here's what X is probably right here. So theory is, since we have divergence, right, that we're going to move up and attack the X range low, right? Yes, that's the theory, but in order to protect ourselves, I taught us and I showed you guys my channeling technique on divergence and RSI, so you can understand that if the channels on RSI and price action aren't showing the same thing, it is probably a continuation within the current trend you're looking at, which in this sense is down. Even though we have bullish divergence, our current trend is down. So now we're in downward acceleration in the bearish trend, which tends to happen down this range right here, and it gets really tight down here on RSI like that, and then we have to break out into an apex like this. So again, we do the same thing. Well, again, this is so far. I don't. Yeah, the fact that this is still above this, while this is below, is pretty frightening. Pause. We're starting to creep out here. Notice that? So I wouldn't be surprised that once this clears this trend line right here, that this is going to shoot up to this X range pivot at least, and just attempt, or at least to this point right here. Attempt, or this, yeah, to attempt to break to the X range pivot. And if it doesn't break, if it can't break to this X range pivot and close above it within those 2 to 4 candle closes on this 10-hour time frame from this now divergent point, from this low right now, then it's going to continue on down once it hits this like median line right here. might even continue on before that. And this is where VRT will help you understand divergences. Okay, we got a low here, right? So you could have moved this channel. Okay, we got a new low to possibly play a divergence off of. So we go here. Okay, here's our new high, right? Here's our new low. You want to be very precise. So then you do the same thing on price. That's fine. This one now is moved to this down here. Remember, it's exact close. And this right there. Oh no, this one down here. Boom. Make sure your points are correct. I know it might look weird for you, but it looks weird. Like, why is it so small? But the channel's so big. Just trust me. Just trust me. Use it like this, okay? Trust me. So you notice right here how RSI and price are now above the median line. As long as we can consistently do this, and also look at this. Well, first of all, 0, 1, 2. Notice how this had a negative divergence here after a bullish call, and a pretty drastic one too. So I do think this will probably roll over to the bottom side of this right here before we get a decent go at it. And this will probably hit this right here, maybe triple bottom here. But this is looking a lot better in terms of a setup to go long. Switch your position from short from up here. And after this, I'm gonna get out of here. Consistently closing above that. Got that plus sign. Rolling over. Starting to roll. Starting to curl over. So now outside of channel on price on our side. On our price, we just got rejected. Just got rejected. If this next candle cannot close outside this channel, we're gonna roll back over. That's the way VRT's. That's how it works. 0, 1, 2. X is somewhere right here. Guarantee it. Somewhere right there. Y. See how this plays 2 or 3 candle closes or new lows. Boom. So 0, 1, 2. X is somewhere here. Y cannot get anywhere within those 2 or 3 candle closes. Alright, and we fell back up, rolled over again. And again, from this point, we do the exact same thing. Keep moving. That one, new one, right there. New extreme low. Same thing on price. We move it now to here. Right there. Same low. Like that. And you notice how we're now beneath this. So like I said, if we close the next 2 to 3 candles underneath this median, we will roll back over south. And okay, notice we broke over. So the likelihood of us 0, 1, 2. Here's X. Here's Y. If the next 2 or 3 candle closes can pivot above this close right here, then this will move up like this, and break this X range low, and then we'll figure out if the divergence should be on that. I like the fact that we're over the channel on both price and RSI, so it wouldn't be like a bad position to go back long, but you understand the trend is very much bearish right now. So again, it's not the best, but still not the worst. I like this buy volume here. See what happens here. So it did move up. It did move up like we assumed to attack this X range right here. Like I said, this was X range, right? You got tapped. Liquidity was dried up a little bit. As long as we held, I wanted to hold this unclosed at all times, but we did close below it, which I guess that was okay. The low, obviously on the low and the close, the initial implication of the divergence is more important than this high right there, but I thought it was a little bit better than that. So liquidity was taken from this X range right here, because here's 0, 1, 2. X is the most pivoted range on your divergence leg. It was taken out with Y with liquidity. Confirmation of trend continuation would have been if Z rolled back over and closed beneath the bottom of 2, 0, 1, 2. But you see we never closed beneath the low of 2. And so we were able to find support out of the side of this channel with RSI rolling over to 21 small and move back up bullishly for a little bit. Now from this point we have more divergence being seen, bearish divergence being seen from this point to this point. So what in essence this is doing is it's giving you a bigger divergence play, like a daily divergence play, and you can honestly play it the same exact way I just showed you, but like this. So you're gonna take, so your new high is this, right? That's your new high. This is day. I guarantee this is a daily. You can take this low right here, right? And do the same thing. That high, this high, this low. So right now we have divergence, right? Right. So remember, it's the same type of divergence we had up here, right? The hidden. So we're gonna do the same thing, same type of play, right? We have hidden divergence off of a divergence. So here's our hidden divergence from this to this, right? So 0, 1, 2. So we got that right, 0, 1, 2. Yep. 0, 1, 2. X is probably right here. Probably right here. Somewhere right there like that. And so if we could break below this, like that, and close beneath that 2 to 3 counter closes, then we're good for this bearish reversal or bearish continuation, because like I said, 0, 1, 2, X. We need consistent closes over X range to be considered bullish. Over. Right now we're hugging it. We're inside of it. We got one bear candle close in the range. And now we're working on a hammer that's pretty bearish itself in the range itself. So let's just see what happens. So we're closing underneath that range. That's good. So we tapped X range low. And there it goes. It's taken out. So now at this point you expect, this looks like it could go back up. A, B, C, WX, A, B, C, W, X, Y, something. But in terms of just looking at RSI, this is calling for more lows. So again, oh, it threw us a new pivot. So I guess we have to move this again. Throw it out there. Throw it out that low. So if RSI can find support on this 21 SMA or the median line, while price action can find support on the outside of this channel or on the median line, then this would be a good long setup. Finally. So we're starting to close underneath this range, so I won't be surprised if we start breaking below this pretty soon. Okay, now we're bouncing off the median line here, and we need confirmation of somewhere that is holding, okay. Bounce off this median line. Like I said, you could have entered on that bounce that I said, although it did break below this, it could have possibly scared you. But we're still bullishly holding the channel on both things, so it's still alright. In my opinion, this will come down again and roll over, just because of this divergence I was seeing here. And you're underneath the 21 still. 0, 1, 2. Here's X. Liquidity was taken out. If this could pivot here, this will be taken out, but look at this. Nope. Is it gonna do it? Oh no, it's not. I thought it was. That's gonna be crazy. So again. Oh yeah, I forgot we had to move our lines. Here's a new divergence leg. Here's a new divergence high. So let's do it on price. New divergence high. Here. Okay, I gotta go to bed. I'm really tired now. As long as if we could just find support here, or if RSI could scooter out this while it's maintaining this line, then it'll be good long. Okay, pause. Pause. Okay, we now have officially 3 points of divergence from there to there to there. Low, a low, and another low. Usually after 3 points of divergence on a higher time frames or whatever time frame you're on, it's usually a good call. And now we see we're bullishly trending outside the median line on our side. We're bullishly trending outside the entire channel on price. When you look from this low to that low, it's less volume. So very telling that the turnaround could possibly be now or like gonna happen pretty soon. So at this point, I'm about to say at this point you probably went along. And so like I said, 0 here, 0, 1. Here's your high, 0, 1, 2. X is right here. So on this breakout bar, if we can consistently close above this on the next 2 to 3 candle closes, we will attack the larger X range pivot. So here's a 0, 1, 2. The larger X range is right here. So your larger target will be right here after we get confirmed on trend reversal from this bullish divergence down here. Like I said, we had pretty good confirmation with the RSI trending outside the median here, along with price doing the same thing there. So 1, 2, 3, then off to the races to go attack the next X range. Boom, attacks it. Okay, you hit your target. Now what? Now what? Now what? Since he has some, again, he has some nasty hidden bearish divergence again. From here to here. So your X range is actually right here. It's right here again. It's the same spot. Probably raise a little bit higher right there. So as long as this is held on support, then this divergence would be false. In order for this divergence you're seeing from, remember we got hidden bearish divergence from this high to this high, across those, from this high to this high, across those. Your X range is right here, right here. So in order to confirm this as a true bearish divergence, we have to get below this and close below it like that. This is the only way. If we don't do that, then it's false divergence. And the bigger bullish divergence was true, which is from here to here to here. So let's move on, see what happens. Boom, breaks out. Okay, and now we're closing above this. So the fact that we probably would even tag this is even higher. Now we want to move this up, because now that we're above the initial 0 point on RSI, on my price, that is now a new buffer zone like your X point. As long as we hold it unclosed, we're fine. Look at that. Isn't that crazy how well this worked? And then I would say at this point, you're gonna look for your upper range of your value range system. Your upper range is your 1 point, 0, 1 to be attacked, and it was broken above. So at this point, your entire divergence was proven true. Your entire divergence from this to here to here to here was proven true. Finally, from this point. And that's basically it. That's basically it. So again, if you want to keep going, we keep going, but we got divergence here, so let's do it right here. A quick little one right here. This is a smaller divergence, so probably won't do it as well. But that's X range right there, in my opinion. So if we can consistently, if this gets taken out, we'll go down and continue on for new lows. But that was weak ass divergence. That wasn't really good divergence. And see that within two count, you got divergence, two counter closes. The third one, it always goes. If you don't get your move by two candles, you usually want to get out of here by a third. The third one is usually the moving one, the one that moves. So let's be careful. That's why I always say 2 to 3 candle closes. And again, you got some sort of divergence here, so again, you could expect this next range to be attacked and so forth. But anyway, that's about it, guys. I am dead ass tired. You notice how? No, it's not. I was gonna say X range is now right here somewhere. Or as long as it doesn't go over to 0.618. And so it never did, huh? Nope. Wow, look at that though. X range low from your rule from this divergence 0, 1, 2, X being here, was held on your first touch. Nuts. It wasn't broken. It was wicked under. So what this tells you, that since we left this breaker point, came back, and we now wicked under the open or the close here. Then that tells you that liquidity is now taken from that breaker point, and if price enters back into that zone, it's not going to hold. And that's why I say once your X range is violated, it's probably not going to hold, because this is exactly why. Your liquidity is taken out once it goes back there. So this is obviously, I now remember exactly what happens from this point. So I'm going to stop the tutorial here because it's pointless for me to know exactly what happens. But let's pause. Where is it? Pause right here. This exact range was the first time I used VRT in its entirety, and I used it on this 10-hour time frame. So 0, 0, 1, 2, X. I'm looking for this to be taken out and close under consistently. Okay, taken out, but we haven't closed consistently. See, we accepted that. That's not a good close, but we have taken it. So if price comes back under here, then we're most likely going to fall out. As long as we don't close above the range. Because if you close above the range, that invalidates the bearish setup. Here's our range high. 0, 1, 2, range high. As long as your range high or range low, depending on what your divergence is, here's our bearish divergence, so right now it's our range high. As long as it's consistently closed under, basically it's a tug of war. Whoever can close above the range or below the range first wins. That's how it is. And if your X range is violated, then you get a little hint that whoever's against X range is most likely going to lose. This time it's the bulls. The X range is in the bears' favor. So the bears now violated X range. The bulls try to cancel that out by closing above the 2 range, or the value range. Failed. Bears now entered back into the X range, and we're again still just trending beneath those two. We just need a break on either side to really give us a signified break. But this is a more bearish setup for sure. 0, 1, 2 broke the X range. So it's definitely more bearish setup. And we're going to see how this falls out. And now we got one close underneath that candle finally. And so this is probably usually the go time Within the next 2 or 3 candles, I think this is when we're going to fall out because we now close beneath the X range. Okay, 2 close beneath X range. We're now breaking and falling under the 21 SMA on our RSI. That right there is entry. If you haven't entered yet, that right there is entry. You were underneath. You were holding this support, flipped under, tried to get back there, rejected it hard, and I think this is where we fall. No. Oh, there it goes. Like, damn, this thing's playing games with me. But that was the first time I used VRT, and I really that's the first time I actually used it in its entirety. Like, cause I remember I was like, I didn't know what the fuck this was in Alley Wave. I was like, dude, what is this? And I was like, you know what? I'm just gonna use VRT and see what happens. And it was one of the best trades I've done. That was one of the best trades I've done. All right. Anyways, guys, that's it. I'm gonna get out of here. All right. I've been talking way too long. I meant to go to bed at noon. I mean midnight. What the fuck, dude? Damn. So, anyways, appreciate you all rocking with me. It's been another 2-hour session. I meant to make this a lot shorter, but a lot sweeter. But hey, it happens like that. I get a lot of questions. I try to answer all your questions for y'all. Trying to make you understand exactly what we're doing, what I'm trying to teach you, what's exactly the tools that you have at your hands. That's what I'm trying to. That's what I'm here for. So, anyways, much love, everybody. This is your boy Satoshi, motherfucking heavy, signing the fuck out. I hope to catch y'all tomorrow. We'll try and shoot for. It's probably gonna be 8 p.m. to 10 p.m. All right, later afternoon. I got finals and stuff next month, so I have to really focus on school. And yeah, that's taking a lot of my time. So yeah, that's why I've been in the background a lot. Anyways, catch me on tomorrow around 8 to 10 p.m. Hope to see y'all. This is your boy Satoshi Mother Effing Heavy signing the fuck out. And you can listen to my tunes for the next 5 minutes. I'll keep the chat box open. If anything pops up, I'll go ahead and answer it. Alright? We are now listening to. I'm gonna put on some. Let's go. You know what? Bang. We're now listening to. Some Odessa. Odessa to send you out. What a beautiful, beautiful sound to leave y'all on. Anyways, it's been a pleasure. It's been real. Y'all have a good night, good day, good morning, wherever y'all at. Hope y'all have a great day. Alright? See your boys, Satoshi Mother Effing Heavy. Signing the F out. And I'm going to leave you with, How Did He Get Here by Odessa. Much love, everybody. Peace.